Hi, Matt Blocki with EWA. Today we are talking about 5 tax tips if you're a business owner. So as a business owner, I'm sure you're aware you pay your fair share in taxes. And as a business owner, there are ways to be as tax efficient as possible. So we're going to be talking about some common tips and tactics, and then also some things that you may have not heard about. And the last tip we have is a simple one, hopefully an obvious one, is doing a retirement plan, but doing the correct retirement plan for your business. Typically, if it makes sense, we recommend do a 401k. A 401k allows you to put a lot more into your retirement plan than something like a simple IRA would, where there's lower contribution levels and lower caps. But in a 401k, entering the 2022 tax year, if you're under the age of 50, so 50 years or less, $20,500 is what's called your 402g limit. That can be done Roth or pre-tax basis. And then $40,500 is the match or profit sharing contribution. So these two together, you can put up to $61,000 per year into a 401k. That could all be tax deductible if you decide to make it all pre-tax. And then if you're over 50, you can put an additional $6,500 as a catch-up contribution in as well. So obviously a high amount of money that can be put in, partially Roth, partially or all pre-tax if you'd like it to be, very tax efficient, asset protected. There's many other benefits. The only downside of the 401k is for you to get the maximum if you're a single employed group where it's just you, then it's very easy. But if you have lots of employees, you do need to contribute either a safe harbor match. You need to make sure that 401k meets certain kinds of requirements or testing to make sure that just the highly compensated people are not getting favored. The IRS has several different tests that will allow for the plan to pass its test. That needs to be done on a year-to-year basis. And because of that, a third-party administrator needs to be hired to test the plan. That can usually be between a cost of like $700 to $1,000 per year to administer that test. So huge benefits. There's also that added cost of the third-party administrator, and formulating this can also be a way to retain your key employees by having a vesting schedule on the 401k. And then once a 401k is maxed out, you can also do what's called a cash balance pension plan. And this is kind of a hybrid between a defined benefit plan and defined contribution plan. But because of the design, this is all done on a pre-tax basis. Some calculations need to be done on how much can be done for you versus your employees. But the limits of this, let's say if you're in your late 40s, early 50s, are almost double what you could put in a 401k. And you can actually have both of these plans. So you can max out a 401k and max out a cash balance plan if your business is very profitable and in a high tax bracket. These are our 5 tips for tax planning. Please reach out if you have any questions.